Hello, and welcome back to another episode of the Collective Clicks podcast. This is your host, Brandon Bateman, and today I'm bringing on Devin Robinson. Devin has been in real estate since 2021, transitioned into running a real estate fund. More recently, we're going to talk about his full journey and some of the lessons he's learned about foreclosures, about Sub2 properties, and most recently about raising private capital. I'll see you there. Devin, welcome to the podcast. How are you?
Thanks so much for having me. I feel like I'm on with the man, the myth, the legend, Brandon Bateman, man. Brandon, I remember, this is crazy, man. I remember when I first started in real estate at a CG in Orlando, I think it was, and we were by the pool,
Mhm.
and it was, man, that was like 5 years ago. It felt like forever ago. It felt like
Oh,
I feel like the
goodness.
world has like destroyed and reconstructed. It is currently reconstructing, and we've just been on this ride together, man. It's been wild.
Oh man, yeah, yeah. And Devin, of course, I like remember you, and I know you, and I feel like we've had a lot of interactions since that point. But I forgot it went that far back
Yeah,
because yeah,
it's crazy.
this must have been like 5 years. So you must have been like at the beginning of CG Select, like
No,
when they
that was
first launched. Oh, with the premiere.
That so I jumped right into Premiere. So like that was a
Okay.
Premiere event. Yeah, that was my very first CG event. It was Premiere. It was yeah, and I think that was the only one that was in Orlando or something like that. But it was a long time ago, man. That was wild. And then I went to Select, which was great, fantastic, one of the best moves that I made. And then we're in Premiere again, and then yeah, so it's just crazy and wild.
Cool. Cool. Well, yeah, it's good to connect after so long. I've seen so much change in your business and your life. So yeah, let's talk about that stuff for people who don't know who Devin Robinson is. Like, what's the story?
Yeah, cool. I guess if we're talking the story, I think it all plays into itself. And grew up in LA, California, single mom, I say like true triple double mom, 3 jobs, 2 kids, worked really, really hard to give us the life that she felt was right for us, which was great. We grew up in really bad areas. Like I grew up in the hood, was around gangs, drugs, all that stuff. But then we grew up in some nicer areas before we moved out. And it's just a testament to her hard work. But wasn't the kind of guy who like, oh man, like trust fund or like learn like that wasn't me. And so then I think God picked me up from one side of the country, placed me on the other side, and changed my life. And then now I live in Charlotte, North Carolina. My wife and I fostered and adopted 3 kids. Just had our 4th biological, and crazy enough, my wife was like, "We're trying to move into this house, and it's a bigger house that we're getting on like a sub 2 seller finance." And she's like, "Well, it's got eight they're pad splitting it right now for 8 rooms, which is insane." But she's like, "Oh, it's got all these rooms. Let's put some kids aging out of the foster care system into it." And I'm like, "All right, let's run it." That's, like we're very, very, very passionate about the impact that we make in the world there. And a lot of the things that we do and a lot of the reasons why I do what I do are more impact driven, which we can get into a little bit later. But yeah, so I guess that's the story. And then along the way, I've sold some companies, crashed and burned other ones, and then got into real estate, wholesaling real estate, and then got into capital raising, started a fund, navigated one of the hardest markets in the past 30 years with my fund and investors who are like, what is going on? And, learned a ton in that process as well. And so like we can hit on all of that stuff. And then now I started a software company. So while still running the real estate company. So like, where would you like to start, Brandon?
Goodness, let's talk real estate first.
Let's do
So tell me about your real estate business, like
it. Mhm.
what you did over time, what you focus on.
Yeah, really interesting. So back in 2021, which is like for me, golden era of wholesaling, right? Like because it's all I know. I know that there's like different eras, but for me, that's the golden era of wholesaling. I found out about wholesaling on TikTok. I was like, I saw this guy and he was like, "Hey, make money with no credit and no cash with real estate." And I was like, "Yo, this is cool." I went to my wife. I was like, "Babe, check this out. You should do this." And she was like, "Nah, I'm good." And I was like, "All right, I'll do it." And so then I joined the guy's Discord. I learned about it. And then I went to my mom and I'm like, "Hey, mom, I'm trying this thing out. It's called real estate wholesaling." And she goes, "That's what I do, right?" And I was like, "What do you mean?" And she goes, "I work as an acquisitionist for a hedge fund." She was like one of the 6 acquisitionists for Amherst at the time. And then she goes, and so then we formulated like this process. Like everything was above board. They knew all this stuff. So we formulated a process on like then we started just reverse engineering wholesaling. We literally would go on Zillow for sale by owner. And then be like, if we'd have a good conversation with them, we'd go, "All right, cool. I'll get you an offer in 24 hours. Then we would send it to Amherst and we go, "How much would you give us for this house?" And then we'd go back there and then reverse engineer our offer. And then like we did 70 in our first 6 months. And so we did 70
Wow.
deals in 6 months. We generated like 800K in revenue, but it also was one of the biggest lessons I learned in my life. Two reasons why. One, really, really, really important, the people who you partner with, because it was some of my best friends at the time. And I thought my wife and I, we were going to move out to San Diego, plant a church with them, do all this stuff. And then it was really hard because like I was giving them 50% because I thought it was just really cool. Like, hey, look, I've got the connections. You go get the deals. I'll give you 50%. But then as it started growing, it started to become an actual company. And then like I started paying for things like CG and we started to explore other marketing and other things like that. And then what ended up happening was I was like, hey guys, I can't give you 50%. Like it's not going to work. So this is actually a company. We've got an office space. We have all this stuff. I need to come down. And they're like, oh yeah, Devin, of course we understand. I was like, on average, people pay like 10% for acquisitions. I'll give you guys 20. And then they were just like, no. And I was like, and like it actually ended up being really bad for our friendship. Still haven't talked to those people since. And that was like 2021. So it's been kind of crazy on how all that stuff went down. Learned a huge lesson. But then what ended up happening is everybody else knows November 2021, the hedge funds dried up. Nobody was buying anymore at all. Like overnight. I could distinctively remember like we're closing on houses in the next day or two. And they were just like, nope. And I was like, well, what do I tell these people? And they're like, that we're not buying it anymore. And I'm like, and there's people like mad at me. And so it was just like really interesting going through that process because we were doing like 10, 15 deals a month and going through that process of them just like just stopping. And I didn't have any other option. I didn't know what I was doing. I like everything started crashing and burning because like I really only had one thing. I went from Zillow for sell by owner. And then I went to the hedge funds. Didn't have any like people at CG were like, oh, I've never really sold a hedge fund. And I'm like, well, then who the heck do you sell to? I don't know anybody else to sell to. And so then what happened was like from, we did 70 deals from April to November. And then from November to February, we did 4. And so then like I had to lay off all of my staff. I had to leave our office. We had to do all of this stuff because like it just literally abruptly stopped out of nowhere. And then I spent the next 6 months building from the ground up. And I'm so thankful for something like CG because like I lived in the CG portal. Like I lived in there. I watched every video. I was in every meeting and I built from like a strong foundation of what a wholesale company was supposed to look like. And then I had the distinct honor and privilege of getting second place on a belt ceremony to Michael Frankie, who was in my small group room giving his like famous foreclosure thing. So I was like one of the first people to hear that. And I looked over to my partner and we were like, this is it. And so I spent like the next 2 months building out all the SOPs based off of his talk. And then we literally went almost exclusively on foreclosures again and really like took off in a big way from there. We dominated the North Carolina and South Carolina market on foreclosures for a really long time. And then like started getting a fund, was like, okay, well actually what ended up happening was a lot of these foreclosures, you need money. Like you need money. And like private lenders still are a little bit like inconvenient. It sounds crazy because it's like the easiest money, but still a little inconvenient because I'm like, hey, there's a foreclosure happening tomorrow. I need you to wire the money in. And they're like, oh, I'm on vacation. And I'm like, well, find a bank somewhere because these people are about to lose their house. And so I wanted to be a little bit more in control of that process and the money and being able to handle the money and being able to deploy it whenever I needed to. And so I went down this rabbit hole of like joined a bunch of masterminds on raising capital, launching funds, ended up launching a fund, gone through the process, but then unfortunately within that process, launched a fund during the worst housing market in the past 30 years. And so just kind of navigating that has been really, really interesting. And so just having really open, transparent conversations with investors, managing expectations, doing all that stuff. I raised a couple million, $2 million in our first like 6 months of raising capital for the fund after like, I maybe only had like 2 private lenders before that. And so then really just learned that process, started loving that process. And then now that's where we are. So that's the real estate side. There's a lot, man. Let's dive in again.
Yeah. I mean, there's a massive amount there. Let's talk about, so that's the journey, right? And then now you have the funds. So help me understand what you got going on now. Are you still doing all the foreclosure stuff or have you moved on from that?
Yeah, so I spend a lot of time back and forth, right? So like I ping pong between the two, and now I'm just trying to find this happy medium with both. And one of the things that happened was I spent a ton of money. Like last year, our overhead was about 130K a month. We were spending 40K on. I think we were spending like 10K on direct mail, and then we were spending money on ads. I'll tell you the biggest mistake I made, Brandon. I didn't use you guys for PPC at the time. What was I thinking? I don't even think we
I
were.
don't know, Devin.
I should have
You
been,
just
bro.
lost all your credibility. I don't know
That's
I
where
don't
it
know what
all
you're
went,
thinking.
man. I really should have. And so then now I'm like, okay, we spent it on like a bunch of different marketing, trying the different things, and then we then like now we currently are like, okay, let's go back to where our bread and butter was, because like deals are a little bit harder. They're harder to come by right now, and I've got a team, and I want to make sure that we can honor that well. And so like we're diving back into foreclosures, and then I've been doing this really interesting thing, and I don't know if you have this, but we've been doing a ton of Sub2 seller finance wraps. And so right now in the market, we're in a very interesting space. So I'm in Charlotte, North Carolina. And in Charlotte, as we know, in 2022, house price of houses dropped about 8%. In Charlotte, the typical appreciation was anywhere between like 4 to 6% before that. Well, 2020, 2021 was just crazy. But like typical appreciation, 4 to 6%. But since 2022, 2021, appreciation has only been about like 1 to 2%, which means anybody that bought a house between 2021 and that, actually, I could tell you exactly. Anybody who bought a house after June 2022 and now, their houses have not outpaced, like the appreciation has not outpaced the cost of fees and commissions with a realtor. So anybody that bought a house between that time frame, like end of 2021 to now, has to either bring cash to close or doesn't have enough equity. They're almost breaking even when they sell on the market. So then we actually transition into like two things. I use Lead Zolo because they have a marketplace where I can buy listed houses for, they have this like marketplace where like $15 a lead down to $1 because it's listed on the market. And then I'll have a conversation with all those people, and they're listed on the market. And if they're listed on the market and they're filling out a form to sell their house, that means that they have motivation to sell the house because one, either it's not selling or they're not getting the offers they need because they don't have the equity to sell the house. And so then I'll come in and go, oh, like, I see you bought the house in the last 3 years. You probably have to like come to cash to closing, or you don't have enough to equity sell the house. And they're like, no. And so then like I'll get them under contract on a Sub2, and it doesn't matter if it's a 6% interest rate or a 7% interest rate, because I'm going to wrap that on a seller finance note at 8 and 9%. And it's a really interesting niche that we've been able to find and do that, kind of capitalize on that in the last year or so. So that's been interesting.
Yeah, tell me a little bit more. You have to understand, I'm coming at this from the perspective of, do I hear a lot of this stuff about real estate investment? Absolutely. You're right. I've been in this industry for a while. I'm not a real estate investor, though. I don't pretend to be. I'm just like a marketing nerd who like exists in this industry.
I love it.
And I feel like I've heard a lot of pretty conflicting things about Sub2. And I'm sure a lot of it comes down to the exact strategies and everything. So I'm hoping you can add like a little bit of balance to this discussion.
100%.
Obviously, some people push Sub2 really hard. I've also heard from a few experienced investors recently, like Sub2, that's an amateur's move. Those
Yep.
people are going to be underwater, whatever, all these different things.
That's exactly right.
How do you view that whole discussion?
I love this discussion. You're right. In the sense of like, I think like amateurs get in trouble with it. So then we go, oh, that's an amateur move. Because a lot of people will go, oh man, no, my risk profile, or like I'm blanking on the word, but my appetite for risk is like, I don't want to get into something that I'm either going to be underwater on or that doesn't have the equity. For me, I'm okay with a lower equity subject to, because I'm going to end up wrapping that on a seller finance note. Now, the biggest reason why people will say, I don't want to do that because of like the due on sale clause. If they call it due and it doesn't have equity, then I'm losing money listing it with a realtor. So what we end up doing on a lot of our wrap deals, which like I don't suggest this for everybody. Like I really don't. If you're listening to this, you don't know what the heck I'm talking about, like don't do it. But you can sell us your low equity subject to deals if you want, or like low equity deals leads that you get. People always send us low equity leads because like we can convert these because we have wrap buyers. And so the biggest risk is it doesn't have equity. If it gets called due, you now have to sell something that doesn't have equity and you're going to be underwater on it. Or the next biggest risk is all of these have higher interest rates and the rental rates are not that high and they're going down. For us, you have to think like they're almost like triple net real estate listings. So we get a down payment. Ooh, sorry, I just heard an echo on myself. Is that?
I don't hear it.
Okay, cool. So we get a down payment. And then when we get that down payment is going to be anywhere between like $30,000 to $60,000. So that down payment we get paid on that, that's like an assignment fee. We'll keep some of it because we want to make sure that if it's lower equity, we want to make sure that if we do have to sell it or anything like that, we've got the cash set aside to sell it. And then the second part of it is we then now get monthly cash flow on it because now we just hold the note. We don't have to hold real estate. We don't have toilets, tenants, trash, none of that stuff. We just hold a note. And so then like my underlying mortgage may be 1,800, but we'll sell it and their mortgage is 2,100. And then when they go to sell it in 8 to 10 months or 8 to 10 years, they go to refinance it or whatever, we get paid again on the difference between the underlying mortgage and where that's at and the mortgage that they have with us. So like it works for us. Some people will say it's an amateur move because like if you're just sub-2ing it, then you're responsible for everything about that house. You're responsible for the rents. You're responsible for the AC. You're responsible for all that stuff. I would rather hold the note because I don't care to be a landlord. I would rather be the bank. So that's kind of how I treat it when it comes with that stuff. So I think that separates it from like amateur sub-2. It's low equity. It doesn't make a whole lot of sense from like, well, now I'm just the bank. That person actually owns the house. I own the note. And I take care of the underlying mortgage, and then I take care of the mortgage with the new owner.
Understood. Okay, so in that way you kind of pass the risk onto them, and you just kind of stand in the middle. And that risk for them is actually relatively normal because owning a home comes with that risk. It's just not something a lot of investors want to take on.
That's right. Yeah, and so for us, it makes sense for us, and it's what I like because I've gotten to the point where I can't tell you, man. I just don't like real estate anymore. I just don't. I don't like the lack of economy of scales on single family residential real estate. I would rather do something like if I know and have the ability to raise capital for it, I would rather do something that's multifamily where I am not the operator. I do not want to be a real estate operator in my life. Just period. Again, don't care to be. Just my personal thing. Some people love to. I am not the one. I've learned that about myself.
Hey, it's about knowing what gives you energy. And it sounds like at the beginning it was that, and it changed a little bit for you. I'm curious to hear.
Oh, go ahead.
Oh, sorry, I was kind of shifting topics. So you say what you're going to say first.
Yeah, I was going to say it might have been like jaded by the market, and that's like a real thing. And I think that happens to, I don't know if it happens to a lot of people. It happened to me, and I think real estate can be super powerful. But I also think like, man, I just don't like how. I don't like how transactional it is. It's just like you're only as good as your last deal. And so like you need a very good dialed in system. You need really good marketing. Like you need Brandon Bateman running your PPC. Like you need these things to make sure that you can continue to keep the wheels swirling. And so for me, like I love it. And we still have our company that operates in that. I would rather remove myself from the operator space though. That's kind of like where I am with that.
Sure, that makes sense. So I'm curious, you mentioned multifamily. Is all this fund that you raised, the private money that you've raised, is this all like multifamily related stuff, or did you kind of plug it into the other business too, like using it for foreclosures, Sub2, that kind of stuff?
Is great. Nope. Yep. The fund that I have is specifically for flipping and foreclosures So yeah, no, it actually isn't for multifamily. I'm just saying in general, like if I want to jump back into real estate, like for instance, we've got right now, I'm just focused on like the software company. So like, let's say we end up selling that. If I get back into real estate, it would be because of the tax advantages, and it would be because of like, I can invest into some other operator doing a multifamily.
Yeah.
I do not want to.
You're saying you don't want to operate deals, which is an entirely different thing from not wanting anything to do with real estate.
Yeah, that's true.
It's which part of real estate do you want to spend your time on? And honestly, I don't think you're saying maybe it's just you, maybe it's a lot of people. I don't think it's an uncommon entrepreneur path at all to find out that actually operating a company was not what I set out to do, because operations is a completely different game. That's why systems like EOS have so much adoption across the world in general, because there's a lot of people that feel kind of similar to how you feel. So tell me in terms of capital. I mean, I guess the way I see it, and I'm just going to explain how I see it to you, and then I'm really interested to hear how your perspective is on that, because you've thought about this so much more than I think about this. But I think of it like there's like levels of leverage that you have in terms of what you can do with the property that can drastically change things. We see this as an
Mhm.
agency where we have some clients that have some options and they have a better return on investment than another client that doesn't have those options and they just cannot make as much money from the leads. Like a good example from this is, recently we had a client that had like a 3x return and they thought 3x was low. We look at it and they were JVing every single one of their deals for dispo and giving the person 50%. And actually, like, there's like a 6x return on the table and
Yeah.
3x of it was going somewhere else.
Yeah.
Like those kinds of things. Like that's like the lowest level is, I'm going to partner with some other company to sell my deals. And then, you could take down the deals, you can wholesale, you have those different options. Kind of the ultimate option, as I see it, is having capital to be able to do what you actually need. Right.
Yeah.
Which means like you can lock up that novation, but like if the seller gets a little edgy, like you could just close on it
Yep.
tomorrow if you need to, if they don't want to deal with the other stuff. And it means like options, right? So that's
Yeah.
kind of how I see it, is it's like a leverage point for the rest of the business. How do you see it?
Yeah. Oh, I like it. So yeah, and very similarly, I see it as like freedom, right? So like I have the ability to make the decisions that I feel are best and that save me the most money. Because like if I have to go and I get a hard money loan, then it's going to be at 80%. It's going to have a point plus 12%. And so like it's going to cost me a lot and it's going to be interest only. And there's going to be all these things, which is fine. But ultimately, like I don't control those terms. And if I don't control those terms, I don't really have the freedom to be able to do what I need with the property. Now, there's a lot of times where I do leverage that. So when we had our fund, we were flipping, I definitely was still using hard money so that I can continue to like recycle that like down payment, rinse and repeat. But ultimately, like having the freedom to be able to go, okay, like you just said, and this happened to us this happens to us all the time, but this happened to us yesterday where like this lady came to us and she's like, oh my gosh, I have a tax foreclosure on my house for $8,500. And I'm like, okay, well, like, do I want to use my own capital for that? Or like, do I just go to an investor and go, hey, I'll give you, 8% on this if you give me the like the 10 grand. And they gave me 10 grand and we just ran it and we went and we went and we paid off that tax foreclosure, but I didn't have to use our own operating capital for something that small. And then like, that's easy for me. We attached it to a property, that property that we're selling that has that tax foreclosure on it, and they're going to get paid that back, and I don't have to use my operating capital. So like, there's a sense in which like it gives me the freedom and the flexibility to be able to, if I want to take it down, then I can take the house down and I can own it, and I can do like a hotel, right, where we take it down and then we do a small renovation, then we put it on the market, or like even with us with installments. So we do some installment sales, and you and I talked about this a while ago, but like we had one deal where we made a lot of money on. The seller made a lot of money on it, but we gave them a $20,000 down payment for us to be able to, do an installment on that. So there's having the capital to be able to do things like that, to protect your profits, to be able to take down houses so that no other wholesaler comes in and tries to take it or whatever, allows you to have like, yes, one leverage, like freedom, leverage of finances, and then like being able to take that stuff and be able to maximize your profits on each house. So I would say yes, if that answers your question and goes in line to what you're saying. Because otherwise, if I'm just JVing, I don't control any part of that process. If I'm just assigning, I still don't control any part of that process, because then I'm up against the gun of what another buyer could do, because then the buyer's like, I can't come through and stop that tax foreclosure. And I'm like, yeah, but the house has equity and it's a good house. And you're like, but I got to even that buyer has to get a loan. So then there's a sense in which like, I just don't control as much of the process as I would like to be able to protect the profits that I have.
Yeah. No, that makes sense. It reminds me, there's this quote. I wish I could remember who it's from. I'm like the king of having quotes that I don't remember where they're from.
Okay.
It's from some like entrepreneur from a really long time ago, where he basically says like the men who manage men manage only the men who manage things, but the men who
Oh,
manage the money manage all. Just kind of
oh wow.
confusing if you think about it, but it basically comes down to like that foundation in business that like you could have a team, you could have all those different things, but like then you had all those things when the hedge funds dried up and your business crashed into the ground
Yeah.
like instantly, right? But if you actually control the money, like if you are that hedge fund, it's a different game.
Yeah. It's the golden rule, right? Everybody knows the golden rule. He who holds the gold makes the rules. And 100%, man.
That's
It's
funny.
just like that. I also looked it up. Will and Ariel Durant is the person who has that quote.
It's funny. It
For your
feels like the first time I ever heard that name, but you know, I must have heard it somewhere. Somehow it's stuck in my brain. But
Yeah,
anyways, yeah, it's
it's
it's it's
good.
a fan.
It's
I think it's a fantastic principle though, especially for a real estate investor, where like it feels like so much is out of your control all the time. Like if I'm
yeah, me too.
imagining a business where less things are in your control. I don't know that I could imagine business more like that, between like you're relying on, the title company and the buyers who make their own decisions and the sellers who make their own decisions and the hard money lenders who make their own decisions and the market that does whatever it wants and your
Whatever.
marketing channel, which seem to just do whatever they want. Like it's a world where there's a lot of things that you just can't control, but locking down as many as you can, that creates predictability. I see the value in that for sure.
Yeah. And like, and then like, and this is also a case where like, let's say you do go into bigger deals or whatever, it doesn't matter. I can't tell you how many more times that like I win a deal because I'm like, oh yeah, I can close in a day. Like I can close in 2 days, I can close in 3 days. Whereas somebody else is like, they say they can give me less, but they're in 3 months, like 30 days. They're in 3 weeks, like, and so it's like, if I can come in and go, hey, yeah, sure. But their pain is big enough and it's immediate enough to where they're like, I need to close now. Like I need to close this week. Like we had a good deal where it was like, the lady was like, I signed the contract on a Monday. It was a Sunday night, Monday morning. And they're like, we need to close by Friday. And it was like, okay. And so it's just one of those things where like, it's not that big. If you have the money, then you could do things like that and you can demand your price because they need to close by Friday and nobody else can close by Friday because everybody else is like, if you're a wholesaling, which is great, like we wholesale. I actually like wholesaling more than I like flipping right now. Like, please turn me back into a sales and marketing company and that's it. But like what we have is we have a piece of paper. That's it. That's all we have. You don't have any control over anything but this piece of paper that you have. And so to be able to control like the timeline of things is so important and you win more deals. Same thing like if you bring that up to scale, if somebody's going to go in with an apartment complex and say, hey, oh yeah, no, we've got $1 million that we could be able to close on this in the next 10 days. Whereas the other person's giving them 1.2, but it's going to take them 2 to 3 months. Then like you're going to win that almost every time. Banks lend heavily to people who have access to capital. Like they'll lend a lot better if you have like access to capital. So there's just a lot more benefits about having access to capital than not.
Yeah. Yeah. In support of what you said, we recently did a survey of investors and, we broke out different things by different metrics. And one of them was which exits they use. And one of those things is, are they buying it themselves or are they wholesaling? And the contract fallout rate was literally cut in half if they're buying it themselves, like somehow,
Yeah.
which is crazy. And I would also imagine the subset that have like their own fund would be significantly even higher because a lot of those that are like buying it themselves with hard money or something like that, where it's possible that, the lender just doesn't want to lend on that particular property or whatever the case is. But I'd be willing to bet that almost everybody listening is like, oh, Devin, that's awesome. I do agree that's better. And probably the number one objection you get is, that sounds awesome, but I don't think I could get people to give me money like you could.
Oh, sorry. You broke up. Dang.
I was saying, I feel like if I'm just guessing what the most common objection people would say after what you're saying right now, they'd say, well, that sounds great, Devin. Yeah, if I had lots of money and access to that capital all the time and could close on my own deals and all that kind of stuff, that would be really cool. But, I can set up a fund, but I'm going to raise $0 because I don't know how to raise money. Like what?
Oh yeah.
And also, I don't think anybody wants to become that person who's always trying to raise money from their friends and family. At some point, you might feel like you're watching MLM, which isn't how people like to feel. So tell me about like your experience with that, because I know you went from having raised like almost no money, maybe money from 1 or 2 private lenders, to now having this whole fund.
I love this. Okay, so this is so good. This is cool because like I think there's a common misconception on just like, oh, I don't have access to money or I don't know anybody that has money. That is a very common like misconception. First of all, you'd be very surprised that people that have a whole lot of money and they have it sitting. One of the biggest things that I always tell people to start to do is just like literally start talking about what you're doing. So like when you start talking about what you're doing, you start establishing immediately like authority in the space, because like I have this quote. I say, what's ordinary to you is extraordinary to somebody else. And so like, if you're talking about the fact that you're flipping, the fact that you're buying and selling houses, that like just even mentioning real estate in general around like on social media, people are like, oh my gosh, that's really interesting. This person must know a lot about this. And then like, if they're following you, even if they're friends, then they start to pick up on it and they start to realize like, wow, he's doing something really cool and really different that I would love to do. And so then you're immediately creating this sense of authority because like they know nothing about it and you're just at least sharing your journey about it. And then one of the things, so like we're just talking about like, we're talking about right now, like bringing audience, right? Because I think you could be the best flipper in the world, or you could be the best real estate developer, construction person in the world. But if nobody knows you're going to do like you're doing it, then like you're never going to raise a dollar. I think like the fact that you just start talking about it is good. What I also love to do is like not just talk about the deals I'm doing, but the impact I'm making. Because what I've noticed is you get to a point when people who have a ton of money, they actually don't care about making more money. They care about preserving their money, and they care about making an impact with their money. And so then what I end up start doing is going, hey, like this is a very safe thing to do, like relative, right? Because the market freaking sucks. Like, hey, this is relatively relatively, because like, hey, this is real estate. People always I couldn't even do it, because like real estate is like long term, right? So people who are trying to like preserve wealth, they're thinking long term. So like long term, they know real estate is the thing. So we can always say like real estate is a safe long term investment. Yes, I can say that. Real estate is a safe long term investment. Yes. And then also, here's the lives that we're changing by doing this. And so people then be like, man, I want to be a part of that thing. So I even talk to investors. Like I've gotten to the point where I talk about in every single like investor meeting, I go, hey, your money's going to make money. Like that's just by nature of what we're doing. Like we're buying low, we're selling high, but your money's also going to make an impact in the world. It's going to help people that are going through foreclosures. It's going to help people that are going through really hard times in their lives. And people love that. People gravitate towards something that's bigger than themselves. And they love that they're contributing, because like a lot of the people who have money to invest, they don't have the time to go and do what we're doing. And so they love the fact that they can contribute monetarily to something that's making an actual impact in the world. And like by osmosis, they feel like that they are actually doing it as well. And so like, that's been really huge, is two people like want to be a part of what you're doing. So I always tell people, share what you're doing, like share the things that you're doing, because what's ordinary to you is extraordinary to somebody else. And then share the impact that you're doing, because people want to be a part of something bigger than themselves. Maya Angelou, she has this quote, and I love this quote. It says, people will forget what you do, they'll forget what you said, but they'll never forget how you made them feel. And so if people can feel like they're actually doing something or making an impact with you and through you, then they actually, that's something they talk about that. They talk about that. They're like, hey, yeah, I'm investing into this this real estate project right here. Oh man, it was so cool. He showed that like there's before, it was the person who lived in there before was this family that were going into foreclosure. We were able to close on it and help them. And so like when you position it like you guys are a big part of helping these people in their lives, then people are like, yeah, I want to be a part of that. And so like there's two narratives. Now some people don't gravitate towards that when like some people that are flipping houses may not think about it like that, but that's a huge pool for a lot of people. And for me, that's something that really like resonated with me and helps people. People love like our foster care, all that stuff. So that stuff resonates with people. And so like, it really isn't about you going out and being like, MLM, raise capital. Are you interested? Like, why don't you join my cause? It's about you just sharing the journey and the impact you're making, and people will want to be a part of it. Now, we can talk about like the strategy of going in and talking to family and friends and all that stuff. But ultimately, it's just letting people know what you're doing. And I actually use like social media as a massive lead gen, because then I start to like, so we talked about like a couple of things, right? We talked about like sharing the journey, talking about impact. And then also on the other side is like, I will educate people where I'll be like, hey, did you know this, this, and this? Like I'll do a poll on Instagram and it'll say, hey, who's moved jobs in the last year and has money sitting in an old 401k? I do. Like, yes, no, yes, no. And then the next thing I'll be like, did you know you can use that old 401k money to invest into real estate? No. Right. And so then like, I will DM all of those people and be like, hey, what are you doing with your old 401k? Nothing. I have no idea what to do. Did you know that your old 401k can invest into my deals? What? So like, then I'm educating people, but I'm also using it as lead gen. Those people have actively, not like passively, they've actively engaged with me about what I'm talking about. They want me to talk to them. That's what social media, they're like begging me to talk to them. They push the button on my poll. And so then I literally reach out to them and I'm like, hey, what are you doing with it? Oh, yeah. No, all the time. We have people all the time invest into our deals with their old 401ks. It's way better than sitting on the stock market. Like, you know what I'm saying? Like, and you're losing money at the rate of inflation for your old 401k. Like I'm educating this to all these people, and I get a ton of 401k money just by educating and engaging with people on that stuff. So there's so many ways rather than just feeling like an MLM that you can actually have people engage and start raising capital from them.
What I'm hearing from you is the idea of I don't know anybody who I can raise money from is BS. Just because when you started this journey, you probably didn't know any motivated sellers whose homes you could buy. And
Yeah.
you know what? You figure it out because that's the business.
Yeah. And like straight up, I'll be honest with you, I had 2 investors that would invest with me before I started my fund. And like they were like on a small flip, they would give me the down payment with like a, Kiavi or something like that, or like a Renovo. I had 2 of those. And then one guy was helping me with like a Sub2. And then like after, now I have like 40 people in my fund. I don't know most of them, and raised millions in it. So like really, if somebody says I can't do it, I'm like, I'm a I'm a black dude that grew up in the hood in LA. Like what makes you any different than me? You know what I'm saying? So like if I can do it,
There,
you can do it. Like anybody can do it. So I just think like there's not really these barriers. I think really it just comes down to your limiting beliefs. But I think this is also really quickly the things that I've loved about getting into the different rooms. And so I think this is all started, and it's a little bit predicated on like the rooms that you get into. When I first joined CG, I was like, somebody was like, "Oh yeah, I have 20 doors." And I'm like, "Whoa, 20 doors. That's legit." And then somebody was like, "Oh, I have 200." And I was like, "200?" And then like there's a guy in CG, and I was on I think like my first or second, I think it was my first CG meeting. It was virtual, and one of the guys in my virtual groups, he was on his yacht in the middle of the ocean, I don't know where. And he's like, "Yeah, I have 2,000 doors." And I was like, 2,000 doors? That's crazy. And then I joined like fund masterminds, and they're like, "I've got 6,000 and 10,000." And I'm like, "What is going on?" But what happens is the ceiling to what I dream to be possible is raised, but also the floor of my limiting beliefs is now raised, because I'm in these rooms to where now I go, "Oh yeah, 1,000? Like, of course." Like, well, yeah, of course. And so the more you get around people, the more you realize, "Oh, okay, yeah, raise 2 million, sure. Oh, raise 50 million, sure." Like it's not as hard as you think. You've never been there to know that it is possible. And I think we have these limiting beliefs, and then we just don't dream big enough because we're not around people who are actually doing it, and we don't think it's possible. Yeah, it's really interesting once you actually like listen to people and learn from people that are actually doing it, and you realize you can do it too.
yeah, that's crazy. Well, I could tell you one thing I really like about it. Something you said you don't like about real estate is it's transactional and suffers from lack of economy of scale.
Mhm.
And the really cool thing about this is it by nature snowballs because
Yep.
it's based on relationships, and those relationships, as you do what you say you're going to do, tend to grow over time, and the amount of money that those people have to invest tends to grow over time, and the number of people that those people know and interact with. And it's one of those things where like I think you have to view it as an exponential game, and the nature of any exponential game is you look at it at the very beginning and it probably doesn't make sense.
Yeah.
But the cool thing is it just grows and it grows and it grows to a point where at some point it makes so much sense that even if the capital you had raised was a quarter of what you had raised, it would have still been worth it. And then that
Yeah,
just
for
continues to
sure.
grow and grow it. And I always think of it like, again, yet another quote that I don't know where it came from. Someone
I got
said,
the keyboard
if
ready. Let me know.
if you're faced with a couple decisions, you don't know which one is the right answer, pick the one that's hardest first.
Mm, yeah.
The idea being like we have this bias against whatever's going to be really hard right now. I see it like I'll draw like a weird parallel. This is SEO in the real estate investment space right now.
Mm,
SEO, fantastic marketing channel. Of all the marketing channels in our survey, the highest return on investment, SEO. Also, among the highest lead quality, right up there with like PPC and TV, SEO completely fell off the
yeah.
graph of where all the other channels go. What's the only difference? It just takes a while. It's not going to hit, you're not going to hit your goals this quarter with SEO. It's probably more going to contribute towards next year's goals. And then what does everybody do? They say, I'm not willing to invest in that. But then some
Yeah.
investors, they kind of get ahead of it and it snowballs and it grows. And it's, because they picked the thing that's like harder right now. And it can pay off massively. Like I'm so grateful I made so many decisions just like that in my own business because you got to think like, what am I doing today that's going to make future me have an easier day? It's
Yeah.
it's all those kinds of things.
There's no doubt. And I love that, man, because like there's this book by a guy named Steve Schwartzman. It's called Whatever It Takes. And Steve Schwartzman is like so Ken Griffey Jr. is my favorite baseball player of all time. Steve Schwartzman is like my favorite fund manager. It's super nerdy. But anyway, so he has this like autobiography. And in the beginning, like the first couple of chapters, he talks about like this whole thing of like, hey, it's regardless of what you do, it's gonna be hard. You might as well go big. Like go as big as you can because like you just have to choose your hard at that point. Now, difficulty is going to be a different thing. One's a little more difficult than the other. They both are hard. They both are hard. You just got to choose which hard you want. And it's like a whole 10x is bigger than 2x kind of like premise as well, where now that we're building this software, I'm talking to my team and I'm like, yo, why don't we just go like, why don't we just go straight to like the apex of what I'm building is like Carta or Juniper Square. And I'm like, why don't we just go after them? Like, why don't we just build what they've built? I'm like, it's going to be hard regardless. It's going to take time regardless. Let's just reverse engineer from the top. And it's really interesting. But yeah, you're 100% right there too, where it's like, it's all going to be difficult. You just got to choose which one you want to do.
Yeah, in case in point, your mom, when you were a little kid, like, do you think she worked harder maybe than you do now? Maybe, but
yeah, she probably did. Yeah. And it's just different,
it's just different work produces different outcomes.
That's right.
Yeah, makes a ton of sense. Man. So if I'm listening to this and I'm inspired and I say, I want to start raising money from more investors to help me be a better real estate investor, what should I do about it?
Oh man, okay. So you know what I'll do? Okay, so I have like a whole like 30, 40 module capital raising course. I'll give it to you guys for free. Like it's for free for your people. So I'm gonna create a thing called funflowos.com/Bateman. And on there, you can get access to the full free course on there. It'll walk you through exactly how to like raise capital using social media, using all different types of stuff. That's going to really be a really good thing. But at the end of the day, I would say just start talking about it. Start talking about it. And then I would also shift the way you talk about it. So people, when I started raising capital, I no longer was a real estate wholesaler, right? Like I no longer was a flipper. People would ask me, what do you do? And I would go, oh, I help people make double-digit returns passively by investing into deeply discounted real estate. And then some people will go, okay. Like some people go, oh, that's cool. But then there's some people will go, oh, tell me more. Like, oh, I'm interested. Oh, I've always wanted to invest into real estate. Like, so then like, those are my people. So then I'm now starting to have conversations backed around like, okay, what are their goals? What are their things? Like we're now having more real estate investing conversations. How can they get involved in what I'm doing? And then like when I distinctively remember sitting on my couch and doing this. When I first was like, okay, I'm going to raise capital. I went through my entire Facebook friends, like every single one of them. And then I took them and I put them all onto a spreadsheet. And then I took them on a spreadsheet and then like, I just started reaching out to them. But what I didn't do was go, hey, I've got this really cool deal that I think would be really cool for you and you would like. Like I didn't do that. I went in and I looked at their Facebook and I was like, hey, Jim, I see that you and the family just went to Disney. I'm thinking about taking my family to Disney at the end this year. What was your favorite thing that you did? And then like left it at that. And then he told me and it was like, oh man, okay, cool. That's super huge. Like, what was one tip that you would give me? Okay, cool. And then I'd be like, hey, what are you up to now? And then they tell me, and then like one of my partners, amazing dude. His name is Carl, and he has this what's called curiosity coaching. And so he does a lot of coaching for CEOs. He's incredible. I highly suggest him to anybody. But he has this one saying too that says, interested people are interesting. And so this is idea that me being interested into this person, interested in what they're doing, interested in who they are, they now I become more interesting to them. Now they're like, okay, like Devin, like, what do you do? I want to hear about this. And so then I tell them, oh, like, I just help people and, make double-digit returns by passively investing into deeply discounted real estate. Oh man, I've been thinking about real estate. And so like, I started getting a ton of people interested in what I'm doing from there. And then like, you want to make sure you keep track of them. And so then this is where like, there's nothing like this exists outside of spreadsheets. So this is what we created now we created what we call the world's smartest platform for raising capital and managing investors. And so my business partner in it, he's getting his master's in machine learning. And so we've created this crazy AI for helping people to raise capital and manage their investors. And it smart matches investors to their deals and does all kind of cool stuff. And so like, you want to keep track of people, making sure that you're following up, and like that stuff becomes a little bit more like automated things like that. Like you do want to do that. But if you're having conversations with people, it's worth it to continue to engage with them over time. It's just like any lead you would have. it is a sale. Like it is a full-time job raising capital, but it's worth it because now you have the freedom and the access to anytime you need it. So depending on what you're doing.
Well, amazing, Devin. But we'll throw links to those things in
Oh,
the
cool.
description for anybody that needs them.
Yeah.
So thank you for taking some time to share your wisdom today.
I hope it was helpful.
And oh, very helpful. I mean, I at least learned something. So
Nice.
that's I always appreciate that. And for everybody else listening, I will see you next week.